Hey everyone, it's Mike Andes, and you're listening to the Business Bootcamp podcast. Today, I'm going to be using the whiteboard. If you're just listening, definitely want to watch today's video because we're going to be going over how you can actually predict the profit on a landscape job or a mowing job or any type of service-based business. You can predict and know very accurately the profit of a job before you even get the job done. Instead of guessing, instead of throwing up numbers, you'll actually have a very, very accurate, down to the penny, knowing what you're going to actually make in profit on a landscape job. Before we get into the show though, a big thank you to today's sponsor, which is Gusto. If you haven't already, go to gusto.com/bootcamp. Try out their software completely free for 90 days, where you can actually have an app and your employees can clock in and out of, but also see where their money goes on each of their paychecks. Go check it out today, gusto.com/bootcamp. Let's jump into it. Very excited about this. So we're going to go over some numbers that I wrote down on my notepad. See, look at this. All right. So let's just go ahead and assume right from the get-go that some of these numbers might be wrong, because I literally jotted this down in about 10 minutes as I just walked in my door here. So let's just assume they might be wrong, but please get the gist of what I'm trying to explain here, because it's very, very important to your business. And in my opinion, the biggest downfall of most landscaping and lawn care businesses is that they forget to know their numbers. They either forget them or they just completely ignore what their numbers are and knowing what those numbers are. I'm going to make sure that my audio is okay. All right, we are good, because last time I spent the entire time jumping into Q&A and then it was atrocious. So we're talking about knowing your profit before the job gets started. And I think that a lot of the reason why a lot of landscapers do not know their numbers is we're just growing so fast, and like the numbers are changing from month to month. Like you can't say, okay, over the course of a year, I was 15% profit margin. It's really difficult to say that, because one month you were 30%, the next month you were 5%, the next month you were 55%. Like you're up and down and you don't really understand, and you're growing so fast. Like at the beginning of the year, your overhead was very negligible because you started by yourself. And then by the end of the year, you have 3 employees and you have a lot more overhead and there's a lot more cost involved. So let's go ahead though and break down something that I think is so fundamentally important. And that is knowing your cost of goods sold, knowing your profit margins, knowing what your overhead percentage is. Okay. So I'm going to show an example, a real example. I shouldn't say a real example. It's a fake example of a real company. There you go. So I'm going to just make up some numbers and we're going to use these for this example. All right. So first of all, let's go ahead and this is for last year. So last year's numbers here for this landscaping company. We could name it something, but we're not that creative. Okay. So revenue for last year was $300,000. This type of video gets like hardly any views usually. So if you can hit the like button, I would appreciate it, because if you don't have equipment or you don't have a reaction video, I don't get a lot of views. So I'd really appreciate a like on these in-depth number-based videos, okay? So profit on this company, and feel free to screenshot this one when I'm done, because we are going to do multiple whiteboards and you're going to want to probably remember this data. All right, so the profit from last year is $40,000, and that's a function of percentage would be 13%. You're like, oh, that's not very good. Okay, well, this is after the owner has been paid, and we're going to assume this owner is still out in the field. But this owner has already been paid. This $40,000 is like after the owner's been paid, everything has been paid off, and that is the revenue and the profit. Now, let's go ahead and break down the COGS. Now, the COGS, or cost of goods sold, includes in this industry primarily 3 things. You got your wages, like your field worker wages. This is not people that are in the office, estimators, office managers, none of that. Just people in the field working. So your wages for them, you got your cost of material, and then you have subcontractors, right? So those are the 3 major pieces of the landscape industry when it comes to COGS, all right? When I say COGS, I'm talking about cost of goods sold, right? So when someone says, what's your COGS? Your COGS are your cost of goods sold. What that means is, what does it cost to actually produce the product or service? This is really, if you think about like a car, this is the cost of goods sold is like the metal, all the rubber, all of the actual people on the production line creating it. Things that are not included in terms of COGS are like administrative fees, office, sales, advertising, etc. Okay, so let's go look at the COGS of this hypothetical company. Of course, my throat goes out right as I start talking here. All right, so the wages for this company is going to be $150,000. Now, for the sake of simplicity, we're going to keep this owner out in the field working. And so his wages are going to be included inside of the COGS, okay? But if he was out of the field, like being an estimator, he didn't actually do any work like producing the service itself, he would not be considered inside the COG equation. But we don't want to overcomplicate things, because basically his wages would eventually shift over to becoming overhead as the company grows and he is no longer in the field. Okay, so if you're not in the field, if you have a bigger company, which I know most of us listening right now are in this $300,000 zone, so I'm not going to do $1 million business where the owner's wages are not in COGS. They would be in overhead. All right, stick with me. If you just joined me, you might have to watch some of the previous stuff just to get caught up. All right, now we're going to talk about cost of material. So again, I'm looking at last year's data to get these numbers, okay? So I did $300,000 in revenue, profited $40,000, which is a 13% margin. And my wages, including, I should probably write that in, including owner's pay. So maybe the owner took $50,000 home and then $100,000 to his employees. Let's just say that, for example. All right, cost of material, we're gonna put at $40,000. Again, we're looking at last year's profit and loss statement. Now, if you're in the landscape, hardscape industry, this is going to be a lot higher as a function of percent against your revenue. In this case, his cost of material, maybe for some plants, mulch, basic services that he installs, is about, I don't know, 11, 13, somewhere in that percentage of his total revenue. Doesn't really matter at this point. All right, subcontractors. So maybe he was doing some jobs that he needed to do some subcontracting, and he just did a couple of those, so $5,000 for his subcontractors. All right, so we added up wages. Again, those are direct wages out in the field. We added up wages, cost of materials, and subcontractors to get our total COGS, which is cost of goods sold. And that is going to equal a whopping $195,000. All right, again, I'll probably make some math mistakes in this video. So let's just embrace that and get my point here, right? So let's just hope this kind of keeps working. So at the end of the day, if we take 195 and we divide that out by our total revenue, that means that our cost of goods sold is 65%. Make sure you guys can see this. Okay. Can you see it? Yes. Good. I even took my graphics off so no one would be distracted. You can see the whiteboard completely. So 65% of revenue went to our cost of goods sold. Now, for you to say that that's good or bad, or you should have a higher cost of COGS or a lower COGS, trust me, you comparing yourself to people in the green industry is like comparing like bananas and apples, peaches and pineapples. Like, it's completely different. Because again, if I am hardscape based, my COGS are going to be a lot higher. If I'm growing and expanding really fast, I'm going to have more overhead because I'm going to have a lot of advertising costs. So trying to compare against people like, oh, mine's better than yours. Like, it's not. Like, trust me, a really high growth company that down the road is going to be extremely profitable could look really bad when it comes to some of these numbers. Okay. So this is more about knowing your numbers, not comparing your numbers. Okay. There's a reason why I'm not showing you Augusta lawn cares or saying that this is the standard you need to be at. That's irrelevant. Knowing your numbers is the first step to actually getting progress and improving those numbers. So 65% in profit. Okay. Now, if we add this 13%, so we got 13% here, what we're going to come out with is a total remainder of 22% overhead. Okay, let me explain just a second. Overhead equals 22%. Okay, so at the end of the day, when you have overhead plus your profit plus your cost of goods sold, that should equal all of the revenue from the business. Okay, so we have cost of goods sold at $195,000. That's 65% of our our revenue. Okay, then we have 13% profit, or 40,000. Could do the same. You could convert this over into numbers, and then overhead is going to be at 22%. Okay, so overhead of 22%, profit of 13%, COGS, or cost of goods sold, of 65%. Okay, now go ahead and take a screenshot of that. Go ahead right now. Boom. So if you're going to compare this later, take a screenshot now, because now we're going to erase this. We're going to use these numbers. And so if you are the type of person like me, you might want to take notes on this one, because I'm going to be doing a few different whiteboards and going back and using those numbers. Okay. So there it is. Okay, cool. All right. So if we are going to try and figure out the profit before a landscape job, there's two things we need to do. Number one, we need to find the overhead percentage. That's why we just did that first step. We found out what our overhead percentage was for last year. So step one, our overhead percentage, can't write at all. Overhead equals 22%, all right? So that's the first step of knowing your profit before a landscaping job. All right, the next step is what we gotta do next, and that is calculate your cost of goods sold accurately. Now, we already figured cost of goods sold as a percentage, but cost of goods sold really changes based on every single job. It depends on, every single job you can, use more materials, or maybe it's more service-based and just like maintenance and just labor. So we want to get very, very detailed. So I can look at one job, not an entire year, not an entire month, but one job, and be able to accurately predict what exactly my profit is before I start the job, not after, before. Here's how we're going to do it. So we're going to assume that we're going to have a $1,200 cleanup. Wipe this out. So we have a $1,200 cleanup. All right, you know what? Let's say a mulch install. All right, so let's do a $1,200, let's just say landscape job. Could be anything, but I'm just going to use a mulch job for an example. Landscape job. All right, fantastic. So what we're going to assume on this landscape job is that we have 16 budgeted hours, so 16 man hours on this property, and we're going to charge the customer, just for the sake of easy numbers, $50 per hour. Okay, this is our cost to the customer and where our budgeted hours are on our estimate. We are also going to know that we need 10 yards, not years, we do not need 10 years of bark mulch. We need 10 yards of bark mulch, let's see here, bark, boom. And that is gonna cost, to the customer, we're gonna charge $40 per yard, okay? So this is what we're charging the customer right here. So if you break this down, you have 16 times 50, that's going to equal $800. And then over here, you have 10 times 40, that equals $400. That's how I came up with my total price of $1,200, okay? That's the pricing. That's how I'm gonna come up with the number. But now what we couldn't do, we could just guesstimate and say, okay, well, out of that $1,200, I'm gonna have a 13% margin. Based upon my numbers, I'm gonna have a 13% margin. So 13% of 1,200 is going to equal, did I write that down? I did, look at that, 156. This is probably where I started making mistakes on math because I was rushing. All right, so 13% of 1,200, $156. I could say in my just, the calculations we made so far, that $156 is going to be the profit for this job. And I would probably be right if I took every single job in my whole year, because that's what I figured the 13% was from my last season, right? But I want to know this job, not all the other jobs, just this one job. How much profit am I going to make just on this one, okay? Here's how we're going to run the numbers. What we're going to do is, instead of just, throwing out, okay, $800 for labor, $400 for materials, charge them $1,200. Instead of doing that, we're going to actually look a little bit deeper. We're going to look at our costs, okay? So those 16 budgeted hours that we're charging the customer, it's going to cost us $18 per hour for labor, okay? In labor. So let's do in labor. That is going to cost us, now we're breaking down our costs on this one job, okay? This is going to cost us $288 in labor. $288 in labor, okay? So we're taking 16 multiplied by 18, if my math is correct, is $288 in labor. We're then going to look at the cost of the materials, because this is what we're charging the customer, including material markup, which everyone should be charging, okay? Very good. That's how you do overhead recovery. That is a different video for a different time. But right now, we're focused on the fact that 10 yards of material, not years, I keep doing that, yards of material to us, because we buy it from a supplier, is going to, let's just say, for example, cost $25 per yard. And that is going to be for the bark. All right, so for bark equals, if we do the math correctly, 10 times 25 equals $250 in materials. See, this is the type of video where if you joined halfway through, you're going to be so confused right now, and you're going to have to, go back. I can see right now the numbers, like people coming in and it's leaving. So you're going to have to watch the beginning and get the whole story, all right? But let's look at this now, all right? It's going to make sense. We got 16 budget hours. We're charging the customer $50. We know that labor is going to cost us $18. Therefore, the total cost for this job is going to be $288 in labor, okay? 10 yards of bark at $25 in our cost per yard of bark is going to be $250 in materials. Now, we need to assume the fact that we're going to have overhead. So let's just assume that overhead is what we were able to calculate up here, which is 22%. So 22%, which is going to equal 22% of 1,200 is, wait, did I do that wrong? 22%, I did something wrong. No, that's right, $264. $264 in overhead is now going to be the cost on this one job. I know exactly what it's going to be, all right? So now what that means is I have my cost of goods sold, my COGS, which is my labor, my materials. I don't have any subcontractors, so there's my COGS. Then I have my overhead right here. Now I can figure out my profit, okay? So if I just go like this, profit, boom, 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 and I take my COGS plus my overhead, and now I can figure out my profit, which my profit is basically going to be all of this added up together. You know what? Let's move this over. So let's add this all up together. It's going to come to a whopping $802. Boom. That includes my overhead and all of my cost of goods sold. So now I'm going to take the total amount from the job, $1,200. I'm going to subtract my overhead and cost of goods sold, which comes out to $802. And now I know with relative certainty that I'm going to make $398 of profit on this job. I can guarantee it. Now, there's one thing, the biggest variable of making this accurate is one thing, all right? One thing alone. And that is that you actually get the job done in 16 budgeted hours. Because if the job takes 20 budgeted hours, now all of a sudden, you're getting a lot more labor. And if it takes way more yards of material, you also have a problem. But you should be able to charge that to the customer if it goes over what you estimated for the material side. But the labor is the biggest variable expense. At the end of the day, that $18 per hour and making sure they got done in 16 budget hours is the biggest variable expense in your business. I have said this time and time again on the channel, and that is that your biggest variable expense in your business is your labor. Because if it rains, this might go up to 18. If it rains and a truck breaks down, this might go to 20. If it rains and you get a flat tire and they get to the job site and the customer talks to them for a long time, now it's like 25 hours. Okay, now someone's lazy and it takes them like a whopping 32 hours to do these jobs, like 2 days. It's crazy stuff. If you did that, if you actually did the math and you put 32 here, all of a sudden, this would double your labor and literally cut off like 40% of your profit would be wiped out if your biggest variable expense, i.e. labor, was not exactly 16. All right? Now, some of you are like, well, what if they go under? Well, yeah, then you make more profit. But the bottom line is, in order to be able to accurately predict your profit, you need to be able to make your biggest variable expense fixed. You're like, how do you do that? That's what pay for performance is. All right. So those of you who've gone to landscapebusinesscourse.com have watched it, seen the Excel spreadsheets, used the software, implemented pay for performance. What pay for performance does is locks this job in at 16 budget hours. No matter how long the job takes, I know my labor is going to be $288. The crew is going to get $288. Sorry, it's going to cost me $288 in labor expense, regardless of how long it takes them. If it takes them 10 hours, I'm still paying $288. If it takes them 20 hours, I'm still paying $288. That is the beauty of pay for performance, because I take the one biggest variable. Because guess what? I know exactly how much it's going to cost per yard of material. I know exactly, what my material markup is and all the rest. I know my overhead is. The one biggest variable expense in your business is your labor. Inefficiencies, people being lazy, people going to the gas station, equipment failure, all the things that go into weather and all the rest of it. That is what's killing you right now on the ability to be able to look at a job like this and know before you get started exactly what your profit margin is. If you're using P for P, which stands for pay for performance, this is what the benefits of P for P is be able to look at a job and know before you get started exactly what the profit margin is, exactly how much money you're going to make, exactly what you're going to have at the end of the day for your profit. All right, this is not rocket science. It's absolutely possible. And I know many of you have implemented it. I'm very, very proud of you. That's P for P, and that's why it's so important. Okay, so I'm going to go ahead and jump in and answer a few questions. For all 78 of you that are on here, I appreciate you being on here tonight. What I'm going to do, because there's so many questions, instead of going through every single question, I'm going to kind of hand pick a couple and try to elaborate a little bit more on them. All right. So instead of just like going through every single one, I might skip yours. I'm sorry. But I'm going to try to get some more in-depth questions so I can give some better answers than just trying to like go through a lot of filler. All right. Let's jump in. All right. Let's see here. Been wondering, Kate. Let's get through some of these. I'm going to try to get some actual questions. Cool. Throwback to my managerial accounting. Yes, exactly. Gotta love it. Okay. Let's see here. 10 cubic yards would be 4 to 5 man hours for us. Yeah, and this is the thing, right? Like it could be, it could be 4 to 5 man hours. But what if that mulch is being installed at the back of someone's property? After you have to go downstairs, there's no other way to get there. And so that's why I kind of get a kick out of it when people are like, oh, I charge $120 per yard of mulch, and that includes installation. That is like the worst form of this, because you've lumped your labor, your materials together and thrown a number up against the wall, and you have absolutely no idea how many budget hours you have. You have absolutely no idea how much profit you're going to make on that job, because $120 per yard of material installed is great if it's close to up front, next to the house, next to the driveway, really easy access. But what if it's down a bunch of steps and you have to literally either carry in, buckets or something like that? Like that would be brutal for your crew, and you would not be accurate on budgeted hours in that scenario. Okay, let's get some good questions here. Let's see here. Oh, I skipped a bunch. Sick. Closed the first job of the year for an aeration job for $105. Took me about 45 minutes to do it. Very cool. You'll need baseline data from your previous year. Yeah, you're exactly right, Colton. That is an assumption here that I've had. And here you could use monthly data if you needed to create these and you're just getting started. You could probably just add up your monthly overhead and figure out the percentage of revenue or profit. Yeah, exactly. Could I apply the business model to a field that isn't lawn care? 100%. Literally, I was just talking to someone that owns a restaurant, and they've implemented P4P using what we talked about, landscapebusinesscourse.com and at Augusta. And they just sent me a screenshot of their revenues, and like they're killing it. And so they were just saying thank you for all the stuff from P4P because it works. It works in anything to do with labor. All right. And so right now we're using a lot at Augusta and in the lawn care industry, but this will apply for anything to do with a human being having to be a part of the COGS, the cost of goods sold. All right. Let's see here. I think I get the P4P when it comes to a project, but I'm struggling with understanding reoccurring lawn maintenance. Could you skim over that? I'm not going to be able to spend time on that, unfortunately. I can briefly say it now, and that is, regardless if it's this or you are using for mowing, you're going to be giving your employees a percentage of the revenue they make for the business. That's really what it comes down to at the end of the day. And so regardless if it's here or whether it is, so for example, here, $18 out of 50 would be, let's see, you do the math, Michael, 40%, 35, be 2, so 25, 4, 32%, it looks like, I'm probably wrong. About 32% of the total amount of money, the labor revenue, is going to the employee in this regard. And that 288 is like fixed. It's not going anywhere. It's not changing regardless. And so when it comes to mowing, it's the same thing. They get a percentage of the revenue they make for the business. You would take the amount of money they make on a route. You'd give them that same percentage. Doesn't matter. All right. And there's a lot more info in Landscape Business Course, like hours of content. So I'm not going to like try to explain all the little fine details on here. Can you list things that included under the overhead just to get an idea? Yeah, so basically anything that doesn't go into the direct manufacturing or creation of a product or service. So for example, when it comes to mowing and landscaping, your advertising doesn't actually cut the lawn. It doesn't lead to anything actually producing the service. So labor and the materials to do the work, that is a big part. And then subcontractors, if you use subcontractors, that's going to go into your cost of goods sold. But in terms of what's overhead, that's like your advertising. If you have an estimator, if you do if you have an office space, your rent, your insurance, all of that stuff is overhead. Okay. See here, what tax forms would you need for the employee's P4P? We use W-2s. They are not 1099. I would be very, very cautious if you think you can get away with 1099 in this industry. If you have them have uniforms, if you require them to be at a certain place at a certain time, if you give them a truck and equipment, I would not recommend doing 1099. You're going to get yourself into some legal issues down the road if you continue to grow. Or if you get into, an employee doesn't like you, they can get you in trouble big time. All right, let's see here. I'm probably skipping stuff. I started using your mulch pricing method because I used to charge per yard and realized that raised beds take like 50% longer. How do you systematize breaking down job costs? Standardized pricing. I use exactly what I talked about here. We're literally calculating our cost of goods sold, right? So I have my cost of goods sold for my labor and for my materials. That's your costs for the job. But then up here, I have standardized pricing based on my hours and my materials. These would be the fixed, or like the standardized pricing is cost per hour and the materials, because that's what's actually going into the job. Not how many square feet in the job is, not how many cubic feet, none of that. It's how long is it going to take me, how much materials. That is my COGS, time and materials. All right? That's the most accurate way in my opinion. Would like an alert before these live vids. You got to subscribe to the channel and hit the little bell button. If you hit the little bell button, you'll get a notification I'm going live. I try to do it like 10 or 15 minutes before. Okay, click the bell. Yes. Any cost that doesn't change. Okay, let's see here. Colton, you're referring to fixed cost. So a fixed cost is anything that doesn't change. Traditionally, this is going to be things like your rent. It's going to be like your payments on loans. It's going to be insurance. Basically things that if you do absolutely no work tomorrow, you still have to pay for. All right, you still have to pay for all of those things. Those are fixed expenses. Variable expenses, the biggest one in this industry is going to be labor, and then you're going to have materials, because if I do a lot more work, I'm going to need a lot more mulch, or I'm going to need a lot more materials. So materials and labor are your biggest variable expenses. But the thing about materials is I know the price per unit. When it comes to labor, I don't know how efficient someone's going to be. I don't know if they're having a good day or bad day, or if the weather's good or bad. That's why I can make that fix with P4P, where they get a set amount for their performance, and they get a percentage of the revenue. I already know what that is. Doesn't matter how they feel, the weather, like anything like that. It just always is fixed. How would you determine a fair and competitive pricing based on location? A big thing that, in my opinion, is making sure that, this is the first thing I talked about the other day, like knowing your labor percentage. Like if your labor, like the cost of you doing labor and getting laborers is like over 40% or even worse, 50% of what you're charging the customer, you probably need to raise your prices. In terms of what is the real determinant is, watch the last video, because the real determinant of whether or not you're charging too much is your close ratio. If you're charging $50 an hour, for example, and closing 90% of your jobs, I would recommend you raise your prices. It's probably going to bring your close ratio down. Now, if your close ratio is 20% or 15%, there's a good chance, all variables set aside and held equal, that you are charging too much and you've priced yourself out of the competition. All right. Can you move on the side again for a screenshot? Oh, you want a screenshot? Okay, I'm going to do it in like 3, 2, 1. Boom, screenshot, do it. There it is. Okay, so let's see here. Back to my comments. My brother had a landscaping biz, and his biggest problems are time, milking, and low prices. 100%. The reason that you cannot create a sustainable business with sustainable profits and consistent and predictable profits is because you have a variable expense in this equation. All right, because literally, like, let's just do a little bit of math. Okay, let's do a little bit of math. We've already cracked up all these numbers. We might as well run some more numbers. Okay, so let's assume that we priced the job that's supposed to take 16 budget hours. Oh, Michael, you're going to get people being mad at you. You're going to get people being mad at you. Take off the banners. Take off the ads. Okay, so let's assume with this job, we budgeted it to be 16 hours. Now let's assume that this person had a bad day. They were on Snapchat. They stopped at a bunch of gas stations, took a really long lunch break, maybe even take a little snoozy in the truck for the little lunchy breaky, and had some nice little dreams while they were supposed to be working on the job, on the clock. So instead of it taking 16 hours, now, so maybe there's 3 guys that show up at this job. So if you just take 16 divided by 3, that's like, it should have taken them like 5.25 hours to get this job done, right? 3 of them on a 16 budget hour job. But let's say there's 3 of them and it takes them like 10 hours. So like 30 hours, 30 man hours are spent on this job. All right, 30 man hours and we're paying them $18 an hour because we're not using P for P, and we're just paying them by the hour. All right, $18 per hour times 30. Michael, do the math. 30 times 18 equals $540. So now instead of paying $288, we have to pay $540. Again, I don't really look at this as a massive issue because this is going to stay the same. They install the same 10 yards, okay? Same 10 yards. The only thing that changes for most of us is the labor, the amount of hours it takes. All right, 30 instead of the 16. Now we have 540 in labor, 250 in materials. We still have the same overhead percentage, but now when we add up our numbers, the total cost on this is going to be plus 264 equals. Now the total cost on this stuff is going to be 1,054. All right, now when I do my mathy and I go 1,200 minus 1054, I'm going to come out with 146. 146. All right, so let me just get this straight. We are literally going from $398 of profit on this one job all the way down to 146. Guess what? That is less than half of the profit. Okay, 398. If half of that was taken away, half my profit was gone, I'd be at $200 in profit. I'm less than that. Okay, my profit is literally going to get cut. More than half of my profit is going to go bye-bye because someone was lazy. Someone, was on Snapchat. They were dinking around. They did not be efficient. They had to come back to the shop because they forgot some materials. They had to come back to the shop because we forgot shovels and a wheelbarrow. This is why you need P for P to standardize this. Okay? Get kind of fired up over that stuff. At what point would you transition from a service like Call Boss to an office person? Definitely when you're big. Like when you take the cost of an office space and utilities and computers and then training an office person for 3 months before they're proficient, and then they leave and now there's a massive vulnerability in your business. Like I can't fathom, like all of our corporately owned locations besides the first one that we already had bought a bunch of office space and bins and a big shop space. Every single corporate location going forward will not have an office. It will not have any office workers. It'll all be going through Command Center, which in this case, for someone like yourself, is a call service. All right. The cost, because all of that cost, all the office equipment, all the utilities, all of the commercial lease that you now need to sign, that is $3,000 a month for the office in the building instead of what you could have got for like $500 a month for just a gravel parking area for your trucks. Now, all of that, guess what that does? Inflates this number right here, overhead. Okay? I'm going to make a video later this week about overhead and how it is killing so many of our businesses as we grow, especially past about $300,000 to $400,000. When you start getting past it, it's like, oh, now I gotta get a shop. Now I'm gonna go get an office person. Now I'm gonna go get an estimator down the road. Those overhead expenses are killing, destroying, annihilating companies as they grow. And you've got to keep a cap on overhead. Okay? I'm not saying you need to be at 22% or below. I'm just saying, in general, the reason most businesses fail is one of two reasons in this industry. One, efficiency. Bam, 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 bam. P for P can help that. Or two, overhead. They get the big trucks, they get the big payments, they get the big rent, they get all this stuff that's really big, fixed expenses, a bunch of advertising that doesn't really work, all overhead, and that drains their business. Because guess what? If all of a sudden my overhead went to 30%, all of a sudden this number goes up, all of a sudden this passes $1,200, I am losing money on this job. And that happens for so many landscaping businesses. And that's why Landscape Business Course exists. All right? So, next question. How are we supposed to be charging for mulch jobs? My pops charges $105 per yard. He gets mulch for $35 per yard. Yeah, that's all great and fine and dandy, but the problem is you're going to have a variable profit margin because if that 1 yard of materials being installed right against the curb, you're going to make great profit margins. If it's being installed in the backyard through a small gate at the bottom of some steps, you're going to have a horrible profit margin. That's why using budgeted hours and materials is going to be the most accurate way because that's your actual cost of goods sold. I graduate from college in May and will be moving back home. What's the best way to pick up yards 2 months in the mowing season? Watch a lot of other videos of mine. I can answer that. Do you or your manager run this COGS profit analysis before or after you send a quote? We actually don't run the numbers. Because honestly, if these is set, I don't need to run and know what my profit number is going to be. I can. Every single one of our estimates, we can figure out exactly what our profit's going to be at the end of the job because we have this fixed. All right? Not super difficult. But we don't run it every single one because they do like 15 or 20 a day at the first one location. Like Command Center probably does, my goodness, probably hundreds and hundreds of estimates every day for the franchise across the system. And we don't calculate on every single job, but it could be done as long as we have budget hours, materials, and we're able to have everyone on P for P where that's going to be a fixed number for the budgeted hours there. Yes, Colton, that's a good question. In terms of managing or adjusting the quote, we would only change a quote if one of two things happen. One, we use more materials. And we are able to say, hey, look, we estimated 10 yards and it says it in your quote. We have to use 12. We're going to tack on extra cost. Or they ask us to do more stuff that's going to require either more materials or more labor. And that is going to be a work change order. And that's either before the job, like before they accept, or during the job, which kind of seems like you're kind of talking about. And that is definitely going to be a work change order where we charge more money. Now, if there's an error in the quote, we're usually going to, we're just going to take that in the mouth. Right? If we make a mistake and say, oh, it's only going to take 10 man hours and it actually takes 16 and we underbid the job, we're going to absorb that issue. With P for P, it really is absorbed by the workers, and that's the balance you have to have. Because if I only budgeted 10 hours on this job and it took them 16, I'm still only going to pay a set amount of labor. It's not going to affect the business. But if you do that too often where they can't make above base pay, now I'm kind of getting in the weeds of people who are in the course. If you do that too often, you're going to lose their trust and they're not going to like P for P and they're going to revolt. So you want to make sure that like 4 out of 5 of your estimates, they can actually beat the budgeted hours. But if we make a mistake, it really falls on the crew and they just have to realize that they got to get to the next job and just try to beat those ones, right? Like there's always the next job where you can win. Occasionally an estimator makes a mistake. They're humans and their budgeted hours are a little bit off. All right. Hey, Mike, I run solo. What percentage of my income should I put towards taxes next year? A good question. What you should do, because you're solo, you're probably their sole proprietor or an LLC. What you should do is figure out and guesstimate how much profit you're going to have at the end of the year. Let's say, for example, you are running a business and it's going to be $50,000. You're going to have $50,000 in profit at the end of the year after all your deductions, after you've paid yourself, all the rest of it. Not pay yourself. My apologies. I'm thinking corporation for a second. My apologies. If you're an LLC or a sole proprietorship, you're going to look at just the bottom line net profit, including what you pay yourself, plus any profits at the end of the day. You're going to assume, okay, let's say at the end of the year, I'm going to make $50,000 in profit. Okay, what's my tax bracket going to be at 50%, at $50,000? Let's say it's 20%. Okay, well, I need $10,000. I'm going to need $10,000 in taxes to pay taxes at the end of this year. That's 20% of 50,000. I'm going to make sure I save up $10,000 throughout the year. All right. I'm not going to go buy a big truck and a bunch of equipment in the fall and get below that threshold of 10,000. All right. That's what you want to do. Kind of estimate what your profits are going to be, figure out what tax bracket you're going to be in, and back yourself out of that. I know it would be less than 10,000 because there's brackets going up to that. I understand you'd have a standard deduction, so it's going to be probably more like 7,000. Okay, I'm using this as an example, but yes, you have a standard deduction that would take like $12,000 off. Depending if you're married, it would be more. So you could actually be paying a lot less in taxes than 10,000. But that's a good way, in my opinion, to budget for it. So you'd always have some money left over. Okay, so I understand there's brackets that go up to say 20%, and you get a standard deduction and all the rest of it. But just keep in mind, you'd rather save too much for taxes than not enough. So if P for P helps labor costs stay fixed and you know your overhead costs stay around the same too, does it mean your profit consistently stays around $25 an hour in this scenario? Let me check. No, it does not. Because if $25 per hour, no, because okay, I see what you're saying. So you're saying that if I charge the customer $50 per hour and should I be assuming that's $25 per hour of profit? No, I can't say that because I still have the cost of materials involved. And P for P, for example, in this scenario, $18 is like 35% of this number up here. All right. So what you could say in terms of what you're trying to say here, Xavier, is that my labor expense is a set percentage of my labor revenue. That is what P for P does, okay? It does not mean that you have a set profit percentage as a function of this hourly rate, okay? Because there's other things involved with profit, like overhead recovery through the use of bark. No, I took the price of bark from $25 per yard. I'm charging 40, right? So that's going to affect the profitability of this job. But what I am doing is I'm fixing the labor expense as a percentage of the labor revenue, okay? Because the employee gets a percentage of the labor revenue from the business, from the job that they do. Okay, I recently discovered your channel. Could you briefly touch on one-click estimating? Yeah, basically you want to be able to every single month be sending estimates to all of the people in your database to be able to try to get more estimates. And the idea is that you take the friction out of the sales process, and they can click one button and ask for an estimate. So at Augusta Lawn Care, we have a button. That's why I call it the one-click estimate email, is because they click one button and that triggers an automation that asks for an estimate. And a lot of times they don't even have to set up an appointment. We don't have to contact them again. We can either do a drive-by or have data enough to be able to give them a core aeration or fertilization treatment prices or whatever it might be. So the reason that's so important is because you keep those customers warm and you're able to constantly be upselling people. With home offices becoming more popular, do you think in the future it's going to be standard to hire an office person that works from their own home, save dollars on some overhead, but lose some control? I do think it is going to become more and more popular. My problem with this is, like you said, losing control. Your office person, as you begin to grow and actually be able to afford one, becomes much, much, much more important to the business. From scheduling and invoicing and customer satisfaction and resolving issues and fighting fires and damage cases and yellow slips and running P for P. There's a lot of stuff an office person's got to do. It's a very underappreciated position, in my opinion, especially as the company grows. I think you need to have that person very connected to your company. They can't be part-time or hey, just letting you know, I'm going to be gone for the next 3 weeks. That could really sink you. And that's why I don't like having the vulnerability of having office staff or even one person, because if that person gets hit by a bus, or if they go on vacation for 3 months, or if they have a baby, or if they get married, or whatever it might be, you're putting yourself in a real vulnerability. That's why I like calling services. That's why we have Command Center for the franchisees. And so, yeah, thoughts on Google Guarantee? I really like it. It's really awesome. Make sure you're going to have to get licenses and stuff like that. Usually you got to be legal, which again, weeds out a lot of your illegal competition. When starting out, would you recommend 40% of revenue going to labor costs just to fill the schedule and then aim for 30? I don't think so. What I would do if I was you, because, okay, this is a good question. Thadio, what I would do is keep it at a number you want to stay at forever, because you're not going to be able to lower that percentage when you have employees. If you have employees and you're like, we're giving you 40%, and then a year later, you're like, okay, we're moving down to 30. You can't do that. So I would start off a number you're comfortable with. Maybe that's 30% for you. And then what I would do at the beginning, like you're saying, to lower costs, is instead of charging $40 per yard and you having a bigger markup of material for this bark, I would charge maybe 30, right? Which is going to save $100 off of this job. It's going to be $1,100 instead of $1,200 to total cost or price to the customer. But if you're wanting to lower price, in my opinion, take it out of other spots besides that fixed percentage that you're giving to the employees on P for P, okay? And for those of you who don't know P for P is, you should join landscapebusinesscourse.com. I have no quims in the price on that thing, whether it be the software, the Excel spreadsheets, and all the other videos, by the way, are good too. But just for P, you should join the course. Trust me, don't try to spend 3 or 4 years trying to figure out what we made in that course. Just use it, take the Excel spreadsheet, make it your own, use the software if you need it. It's great. It took us a long, long time to figure that out. So I have no qualm about charging that. Some people are like, that's $519. I'm like, well, you go try to figure that stuff out and spend 3 years trying to do the numbers and then make the software and Excel spreadsheets. It's really great system. What do you think $300 from a 2-hour job with 2 people? Is that good for a solo operator? Maybe it's good, maybe it's bad. Depends on so many different variables. Like, what's your cost of the material? What is your cost of living? Are you paying someone $50 an hour to work for you because you're living in San Francisco? There's so many. Oh, you're a solo operator. My apologies. Oh no, you say with 2 people. Yeah, it's good. There's so many variables. Is that job 2 hours away from your core competency and your core route? Then it's not good, right? So there's so many different variables. Let's say my goal is to make $10,000 per year in profit. Couldn't I just implement on my hourly? Couldn't I just implement it on my hourly so at the end of the year, regardless of what happens, you'll end up with around $10,000? Thanks for the answers. You're talking about the tax thing. Okay, to make 10,000, couldn't I just implement on my hourly? I'm not exactly sure what you're asking there. Sorry, brother. Diego, if you had just a one truck crew, how would you schedule maintenance accounts and one-time jobs like cleanups or saw install? What I would do, Diego, I would say, okay, I'm going to mow lawns, let's say Monday, Wednesday, and Friday, and I'm going to be able to move them by one day on the schedule based upon like raining and things like that. And then on the other 2 days of the week, I am going to do projects, giving me some flexibility to be able to move the mowing around based upon the weather. Whereas like I can usually install like a mulch or trim bushes in the rain. Really difficult to do like mowing in a lot of parts of the United States. In our market, we get so much rain, we have to keep mowing. We have to stay on the schedule. It doesn't really do a whole lot for us to try to get around it. But that's kind of what I like to do in terms of scheduling is like a Monday, Wednesday, Friday, moving from like left to right in your market so that it's all systematic. Like I hate when people are like, okay, we're going to mow on Monday and like here and then here and then here and then here. And then like Wednesday here and then here and then here and then here. And like, it's like just scattered. It's like just roll the dice on where they're going in that direction. Start from one side of your market, move to the other or top down, whatever. In my opinion, finish up somewhere around your shop. And so at the end of the week, if you're trying to wrap up the loose ends and people are coming back from projects, you can send them out on a mowing route just to help finish up the route for that week. That's just my opinion. Finish up on the side of your territory that is closest to your parking or storage or your shop space. I made $300 an hour pulling for weeds. Yeah, again, I kind of addressed this. Hey, Mike, I'm struggling to explain P4P in a short sentence, something I can put on the wage section for new hires. Any recommendations, or is that a landscape business course special? You're going to get a lot more information in landscape business course special. That's funny. You're going to get a lot more info in landscape business course, but let me give it to you really, really clear. If I'm explaining it to an employee, this is what I say. You're going to make a percentage of the revenue you bring to the business. That's it, right? Yes, there's other fine print about like quality in terms of callbacks and damage cases and all the rest. By the end of the day, P4P is this. You're getting a percentage of the money you make for the business. Therefore, if you work harder and faster and more efficiently, you're going to make more money. If you want to slack off and go to the gas station, go for it. It's all up to you. You're just not going to make any money. All right, that's P4P in a nutshell. Colton, yes, get the likes up. Get the likes up. Come on. We're still at 70 plus people. Okay, James. Okay, last question here. Having a solid day still, what are your thoughts on having to develop crews so you can scale without going full-time yourself? Too much hassle or risk? Okay, so you still have a day job. You're trying to develop a crew so you can scale without them going full-time. In my opinion, again, it seems like I'm just talking about P4P in this video. I didn't really mean it to be that way. In my opinion, you have to be on P4P. So you don't have to constantly be managing them, wondering where they're at. You don't have to like do callbacks for them. P4P is going to make sure that they are efficient. It's going to make them responsible for the jobs they do. And they are going to be responsible for going back to a callback, fixing a damage case. They're going to be as efficient as possible. You don't have to, have a camera to make sure that they're efficient in the morning and not like drinking coffee for 20 minutes or showing up late. Like P4P manages the behavior. You as a personality do not want to be managing people because you could be somewhere else. You could be at your job. You could be on vacation. You could get hit by a bus. But if you have systems in place to manage the behavior, i.e. P4P, to manage the inefficiencies that's just common in this industry for labor, that stop at gas stations, have smoke breaks on their cell phone, dink around the shop, forget equipment, make callbacks, all of that is inefficiency. And P4P manages that inefficiency and makes it a standard number, a standard percentage that I can count on every single time in terms of what my profit's going to be on a job. All right. So thank you so much, everyone, for watching. I'm going to go ahead and throw this up. The reason I'm doing this, I'm really pitching this hard in terms of P4P right now is because we're going to the spring rush for many of you. And if you do not figure P4P now, you're not going to do it in the spring. The course takes a solid month to implement P4P. You got to run your trial periods. You have to do your vote and your implementation. I walk you through the process. But if you don't do it now, you're not going to do it in the spring rush. You're not going to do it when you're having 5 estimates, 10 estimates, 100 estimates a day. You're trying to hire people and you're trying to get them as fast. Like anyone with warm blood and 2 hands, like let's get them in there. P4P is going to be the thing that allows you to attract great talent, retain them by paying them more than your competition, and it's going to be able to manage the business so you're not always constantly tracking their trucks, wondering where they're at, always in the back of your mind, wondering if they're being efficient and lazy in the jobs. That doesn't happen. You can scale your business using P4P, pay for performance, where they get a set percentage of the revenue they bring to the business. Why is that important? Because I want to have a consistent profit margin to every single job before it even starts. I already know what the profit number is. Know your numbers, know your cost of goods sold, know what your material and your labor costs are, all that good fun stuff. But at the end of the day, I want to make some profit, baby. Thanks so much, everyone. We'll see you in the next video.